Welcome back to the AG Insider. This is Captain Silver, and the American economy has officially crossed the point of no return. With oil exploding to $90 a barrel and Eastern silver vaults just 15 days away from running completely empty, the terrifying era of 2026 stagflation has begun. This is not a temporary market correction. This is not a cyclical downturn that the Federal Reserve can fix with a few rate cuts. This is a structural collapse of the fiat currency system happening in real time while the cost of living is going parabolic and the economy is simultaneously dying. We are entering the most dangerous macroeconomic environment in modern American history, where inflation and recession are happening at the exact same time, where central banks have no tools left to fix the problem, and where the only rational response for anyone who understands what is happening is to get out of paper assets and into physical hard assets as fast as humanly possible. The Shanghai silver vaults have lost 77% of their inventory and will be completely empty in exactly 15 days. Oil is at $90 and threatening to go higher if the Strait of Hormuz situation continues to deteriorate. And the Federal Reserve is sitting there completely paralyzed, unable to cut rates because inflation is already out of control, and unable to raise rates because the debt-based economy would instantly implode. This is the end game. This is the moment when the 50-year experiment with pure fiat currency reaches its mathematical conclusion. The suits want me to tell you this is not financial advice, and they are absolutely correct. This is not financial advice. This is a macroeconomic emergency broadcast explaining how stagflation 2026 is triggering the final rush out of the US dollar and why physical silver is the only lifeboat left. Let me know in the comments below right now, because I need to hear from real people about what is actually happening in the economy. Are you watching your grocery bills explode? Are you paying 50 or 60 or 70% more for food than you were paying 2 years ago? Are you getting crushed at the gas pump every time you fill up your tank? Are you watching your rent or mortgage payments eat up more and more of your paycheck while your income stays exactly the same? Tell me the reality of your local inflation. Tell me what you are seeing in your city, in your state, in your neighborhood. Because the official government numbers are complete lies. The CPI says inflation is 3%. That is propaganda. That is a statistical manipulation designed to keep you calm while your purchasing power is being destroyed. The real inflation rate, the inflation you feel when you go to the grocery store or fill up your car or pay your electric bill. That inflation is running at 15 or 20% or higher depending on where you live and what you buy. And it is only going to get worse as this stagflation crisis intensifies. Now let me break down the definition of stagflation and explain exactly why this is the nightmare scenario that every economist fears. Stagflation is the combination of two things that are not supposed to happen at the same time. Stagnation, which means the economy is not growing or is actually shrinking, and inflation, which means prices are rising rapidly. Normally, these things do not happen together. Normally, when the economy is weak, when businesses are struggling and people are losing jobs, prices go down because demand is low. And normally, when the economy is strong, when businesses are thriving and people have money to spend, prices go up because demand is high. So you either have a recession with low inflation or you have growth with high inflation. You do not usually have both at the same time. But stagflation breaks that pattern. Stagflation is when the economy is dying and stalling out. But at the exact same time, the cost of essential goods, especially energy and food, is skyrocketing. And this is exactly what is happening right now in 2026. The economy is weakening. The stock market is volatile and threatening to crash. Business investment is freezing because of geopolitical uncertainty. Consumer confidence is collapsing because people are scared about the future. Unemployment is starting to tick up. All the classic signs of a recession are present. The economy is stalling. But at the exact same time, oil is at $90 a barrel. Silver is at $84 and the physical supply is evaporating. Gold is at all-time highs. Food prices are spiking because farming requires diesel and diesel costs are going vertical. Transportation costs are exploding. Electricity costs are rising. Everything that requires energy is getting more expensive. And energy is required for everything. You cannot grow food without diesel. You cannot transport goods without fuel. You cannot manufacture products without electricity. Energy is the foundation of the entire economy. And when energy costs go parabolic, the cost of everything else follows. This creates an impossible situation for the Federal Reserve. Let me explain why they are completely paralyzed. In a normal recession, when the economy is weak, the Federal Reserve lowers interest rates to stimulate growth. Lower rates make borrowing cheaper. Businesses can borrow money to invest and expand. Consumers can borrow money to buy houses and cars. And that borrowing and spending stimulates the economy and pulls it out of recession. This is the standard playbook that the Fed has used for decades. But that playbook does not work in stagflation. Because if the Fed lowers rates right now, if they make borrowing cheaper while oil is at $90 and inflation is already running hot, they will pour gasoline on the inflation fire. Lower rates mean more money creation. More money chasing the same limited supply of goods. Prices go up even faster. Inflation spirals out of control. We go from 10% inflation to 20% to hyperinflation. The dollar collapses. so they cannot cut rates. But they also cannot raise rates. In a normal inflationary environment, when prices are rising too fast, the Federal Reserve raises interest rates to cool down the economy. Higher rates make borrowing more expensive. People spend less. Businesses invest less. Demand falls. Prices stabilize. This is what Paul Volcker did in the early 1980s when he raised rates to 20% to crush inflation. It worked. Inflation came down. But it also caused a brutal recession with 10% unemployment and massive business failures. And the reason Volcker could do that, the reason the economy could survive 20% interest rates, was because the debt levels were manageable. The national debt in 1980 was about 33% of GDP. The government could afford to pay higher interest on the debt without going bankrupt. But today, we have 130% debt to GDP. We have $38 trillion in national debt. And if the Federal Reserve raises interest rates to even 10%, let alone 20%, the interest payments on that debt would consume the entire federal budget. There would be no money left for anything else. Social Security would stop. Medicare would stop. Defense spending would stop. The government would have to default or print money to pay the interest, which would cause hyperinflation anyway. So raising rates would instantly collapse the debt-based economy. They cannot raise rates without triggering a cascade of sovereign debt defaults, corporate bankruptcies, and financial system collapse. So what can they do? They cannot cut rates because inflation is too high. They cannot raise rates because debt is too high. They are completely paralyzed. They are frozen. They have no tools left. And while they sit there doing nothing, while they pretend everything is under control, while they feed you propaganda about soft landings and resilient economies, the real economy is collapsing and inflation is accelerating, and the people who understand what is happening are rushing out of the dollar as fast as they can. This paralysis is causing massive institutional wealth to rush out of the dying fiat US dollar and into tangible scarce hard assets like physical silver before the supply runs out. Sovereign wealth funds are buying gold. Central banks in China and Russia and India are buying gold. Pension funds are moving into commodities. Hedge funds are buying silver. Everyone who understands macroeconomics, everyone who has studied currency collapses and stagflation and central bank failures, they're all doing the same thing. They're getting out of paper and into physical. Because they know that when central banks are paralyzed, when the mainstream media and politicians are banned from saying the word stagflation on television, because if they admit we are in stagflation, if they admit the Federal Reserve is paralyzed, if they admit there are no good policy options left, confidence in the system would evaporate overnight. People would panic. There would be a run on the banks. There would be a rush into physical assets. The dollar would collapse immediately. So they lie. They gaslight you. They tell you the economy is strong. They tell you inflation is coming down. They tell you the Federal Reserve has the situation under control. But it is all propaganda. It is all designed to keep you calm and invested in the paper system while the smart money quietly exits. If this channel's mission to broadcast the unfiltered macroeconomic truth helps you see through the lies, if it helps you understand that stagflation is here and the Federal Reserve has no solutions and the dollar is in terminal decline, then consider hitting that super thanks button below to support this work. This is how I fund the daily research and analysis that allows me to bring you information that the mainstream media is paid to hide from you. Now let me give you the action plan, because time is running out and you need to understand exactly what you need to do to protect your wealth. Holding cash in a bank account right now is a guaranteed death sentence for your purchasing power. I do not care if you have $10,000 or $100,000 or $1 million sitting in a savings account earning 2% interest. That money is dying. It is losing value every single day. Because real inflation is running at 15 or 20% and your savings account is paying 2%. You are losing 13 to 18% of your purchasing power every year. In 5 years, your $100,000 will have the purchasing power of maybe 50 or 60,000 in today's dollars. That is not protecting wealth. That is watching wealth evaporate. And it is going to get worse. As stagflation intensifies, as oil stays at 90 or goes to 100 or 150, as the Federal Reserve continues to sit paralyzed and unable to act, inflation is going to accelerate. We are heading into double-digit official inflation. We are heading into 20 or 30% real inflation. And if the dollar loses its status as the global reserve currency, if the BRICS nations successfully launch their gold-backed trade settlement system, I am going to be tracking the Federal Reserve's panic moves and the real inflation data every single week. I am monitoring everything: the CPI releases, the PPI data, the energy prices, the food prices, the wage data, the unemployment numbers, the Federal Reserve meeting minutes, the balance sheet, the repo operations. Everything that tells the story of where we are in this stagflation crisis and how fast it is accelerating. Make sure you are subscribed to this channel with the bell notification turned on so you can navigate this stagflationary depression step by step. When the Federal Reserve makes their next emergency move, when they panic and start cutting rates or expanding the balance sheet, when the next inflation report comes in hotter than expected, when oil breaks $100, when the Shanghai vaults officially go to zero, I am going to be breaking it down immediately and telling you exactly what it means for your wealth and what you need to do. Next. Here is the bottom line, and this is the reality that everyone needs to face. Stagflation 2026 is not a theory. It is not a possibility. It is here. It is happening right now. The economy is dying. Inflation is accelerating. The Federal Reserve is paralyzed, and the US dollar is entering the final stage of its collapse. This is the endgame of a 50-year experiment with fiat currency that was always going to end this way. Every fiat currency in history has eventually gone to zero. The dollar is not special. The dollar is not exempt from the laws of economics, and we are watching it happen in real time. The people who understand this are moving their wealth out of dollars and into physical hard assets. The people who do not understand it are going to watch their savings and their retirement accounts and their purchasing power get destroyed. This is the greatest wealth transfer event of our generation. From people holding paper to people holding physical. From people trusting the system to people who saw through the lies and took action. I just posted my exact portfolio allocation to protect your family's wealth from the collapsing dollar to my private insider community. I broke down the percentages. How much physical silver? How much gold? How to think about cash positions during stagflation. How to calculate real returns versus nominal returns. How to protect yourself from both the inflation side and the recession side of stagflation. How to position for the next 6 to 12 months as this crisis unfolds. If you want to see exactly how Captain Silver is navigating the stagflation nightmare, click the join button below and become an insider member right now. The people who join today are going to have the roadmap they need to not just survive this crisis, but to come out ahead while everyone else is getting destroyed. If you want to know exactly how Wall Street is using artificial volatility to steal your physical silver before this 15-day countdown hits zero, you must click the video on your screen right now. I expose the entire $84 paper trap. Do not wait. Click right here and I will see you in that video.